Hi guys, it's Rob Flux here from Property Developer Network, coming to you for yet another Sunday session. This week's session is the HomeBuilder government incentive program, along with other government incentives and bonuses and that sort of thing that the government is handing out at the moment. Trying to re-stimulate our economy and some of the ways that you can actually take advantage of that over the next 6 months or so as they try to create jobs in our economy, recovering from the COVID world. So firstly, I'm going to start with saying that due to the nature of the program, the discussion today, I need to give a legal disclaimer to say that I don't have an AFSL license. This is, I guess, general advice. Educational purposes, I should say. I can't give general or specific advice for your individual circumstances. So that said, what we are talking about today is really trying to talk about the recovery of I guess the lack of employment, for want of a better word, in and around our economy, and the fact that the Property Council has claimed that the property industry is actually the largest employer of any other industry that there is in Australia. Okay, so 1.4 million jobs, which is about 13% of our GDP, or just a little bit over $200 billion, are actually inside the property economy. Now, having said that, Property Council have recently surveyed all of their members, and you can see just here the predictions with the amount of work that is actually dropping off in the May and June area, mainly because of the fact that we've had COVID. So projects that have been underway have been continuing, but nobody's been actually signing new contracts. And it's precisely because of this and because of how large that industry is that Josh Frydenberg has stated that the housing sector is actually critical to the Australian economy. He put a statement out, I guess, only a couple of weeks ago, basically saying that they were going to kickstart these grants and formally announced the HomeBuilder grant package. And that was on the 4th of June that this was actually announced. So 25K construction stimulus package for, I guess, a range of criteria that is going to be both substantial renovations and brand new builds. Now, there's some qualifying criteria that you need to be aware of in order to get access to this. It's not an automatic. So we're going to go through some of those qualifications. And we're also going to look at what other stimulus packages may be out there. And you, either as an end investor wanting to do things in and around I guess, taking advantage of these benefits, whether you're a new homeowner or whether you're an existing homeowner wanting to take advantage of it, we're going to walk you through whether you do or don't qualify in this particular space. So who does qualify? Let's take a really close look at this. So firstly, you need to have, there's an income cap measure. So if you are an individual, they're going to be looking at your income tax year ending in 2019, so the 2018-2019 financial year, and you need to have earned less than 125,000 if you're applying for this as an individual. If you're applying for this as a couple, then you need to be less than 200,000 for the two of you, again for that 2018-2019 financial year. You need to be building a brand new property, okay? So that's one of the two criteria. And the brand new property needs to be less than $750,000. Now, that is the total value of the house and land. Now, I have to say that's quite a tricky criteria to actually qualify for, knowing that if you're wanting to be in a city, in most of our capital cities, the cost of the land is substantial. I know, for example, that just this last week, I sold a vacant block of land for almost $740,000 alone, just for a single block of land. So getting under that 750 criteria could be tricky in some particular circumstances. Now, it may mean that you have to go out to the edges of the city in order to do one of these brand new builds. And so that's something that you need to take into consideration, because it's the combined house and land value that is of importance. That said, you don't have to build a brand new home. You could also substantially renovate an existing home that you already live in. Now, that substantial renovation has some qualifying criteria in and of itself. So it needs to be a minimum of $150,000 in spend and can be no more than $750,000 with regards to the renovation. On top of that, the combined value of the property must be less than $1.5 million. So they're narrowing it down to a very niche, I guess, area of, I guess, the market to say who can and can't qualify for it. Now, for a substantial renovation, I'm going to say that a lot of Australians will actually qualify for that if they actually have a home. So from that perspective, I think that is quite good. For the new build, I think the 750,000 criteria might be a little bit low from that threshold perspective. There's also some timelines associated with this. So you need to be signing a contract between the 4th of June and the 31st of December. It's really important. This is only a 6-month time period that this bonus is actually available for. Now, when you sign that contract, the next part to the criteria is that the build must commence within 3 months of signing the contract. So if you think there are going to be any delays at all in your building contract, in them actually commencing, then you may be better off to sign just a little bit later in the process. I'm sure your builder would be quite understanding of that if that's the case. And then largely you need to be, it needs to be own or buying it in your own personal name, okay? It can't be in a company and it can't be in a trust. Very, very clear criteria that sit in and around that. And lastly, you need to be an Australian citizen. So it's not available to non-residents, permanent residents, or New Zealand citizens. So what is actually excluded from this? Because there's a lot of people asking, well, can I do this or can I do that? So I'm going to go through some of the things that we know categorically are out. So let's have a look. If you're building or renovating an investment property, this is not for you. It is only for owner-occupiers, unfortunately. So no investment properties, no developers, no anybody, I guess, doing it of their own, I guess, from an investment purpose in any way, shape or form. It needs to be your own home, your principal place of residence, okay? If you're building a new home and the combined land value is over, so the home and the land combined are over 750, you do not qualify. You can't be an owner builder. It has to be through a licensed builder that you have to go through. If you are a permanent resident, New Zealand citizen, or a visa holder, unfortunately, you are excluded from this as well. And some of the criteria that people are really, really caring about, well, what is a substantial renovation? Well, you can't include things like swimming pools, tennis courts, outdoor spas, saunas, sheds, garages, granny flats, etc. I have a number of people that have actually asked me on those particular circumstances. Now, having said that, there is some good news. So if you actually already own your home, it is possible. So let's just say you've got an old clunker that's sitting on the block. It's actually possible for you to build a brand new home, knock down the existing house and build the brand new home, and it would technically be counted as a substantial renovation. Okay, so knock the house down, and so long as it's between 150,000 to 750 total value, that is the house and the land. So that's the or if it does not exceed 1.5 million, I guess, in that pre-renovation space. So that is also handy. Also, if you want to buy land and then do a build, you need to make sure that, again, that house and land combined value are less than 750,000. Now, government incentive from the federal government is not the only place that there are some construction bonuses going on. And so what I'm going to try and go through here is a couple of other state government-led initiatives that are also in addition to that $25,000 grant. So depending upon where you live, there are a whole bunch of extra bonuses that you may be able to get hold of. So if you happen to live in Tasmania, well, Tasmania is very, very fortunate. So on the 4th of June, Tasmanian government announced that there is a what they're calling a construction blitz scheme. And so there's $20,000 for any owner-occupier to build a home between the 4th of June and completed within 18 months. Okay, so this is on top of the federal government the federal government home builder package. So it's on top of that. So if you are eligible for both, then you can potentially get $45,000 in order to boost your building, and that's a long way towards, I guess, a substantial deposit. But I have to say you can't use it as a deposit because you actually get this refunded through the process. So you need to actually have qualified for the loans up front. Western Australia also has a substantial grant called the Building Bonus Grant, and they are also giving away a $20,000 grant. Now, for Western Australia, it is slightly different. So if you're halfway through a project, so long as it is a single-story project, you can actually posthumously apply that. So that's fantastic. I guess this is not means tested. So irrespective of the federal government, you can actually use this one in WA. So potentially up to $45,000 if you are in WA. So fantastic news for those guys. WA market has been struggling for quite some time. So this will really give a huge kickstart into that realm. Now, having said that, a number of us are developers and we are wanting to sell stock to our end users. And so understanding who our end users are, pricing some of our stock accordingly, we may be able to get those building bonuses for the ultimate buyer, not for us, unfortunately, but we can market that towards the ultimate buyer. And then on top of that, if that ultimate buyer happens to also be a first homeowner, then they may also get first homeowner grants. So these things just start stacking and stacking and stacking. So if you're looking to do anything at the moment in and around, I guess, your development side of things, there are going to be huge incentives for people to be buying a house and land package off you. And I would be framing these as house and land packages as opposed to selling them as a finished product. Because if it's a finished product, you, the developer, are constructing it. Whereas if it's a house and land package, then the incoming person is taking on that build contract and they're the ones getting the bonuses. So let's have a look around the grounds at some of the first home buyer packages that are sitting out there. So New South Wales have some pretty good bonuses. So they've got $10,000 for their homeowners, so first homeowners there. Now, what's important here is the home must be valued up to $600,000. And I guess there's also, sorry, I'm having a little bit of a brain fade. If you're buying new land, it's a new build, then the total price, including the land and the home, must be less than $750,000. That's where I was going with that. So be very cognizant of that. $750,000 number seems to be both federal and state in a number of instances. So if you're trying to manufacture a particular kind of product, make sure you try and keep under that $750K threshold. That's really key, and that will be a sweet spot for people to take on many, many projects for you. So that's an extra $10,000. So for New South Wales, that's $35,000 in total that they can actually get access to with the federal and state government. Now, Victoria, they also have a couple of different kind of grants. So there's a $10,000 for urban homes and $20,000 for homes in regional Victoria. Okay, again, $750,000 is that threshold. Now, depending upon where you're physically located, by stacking those together, that's up to $45,000 with the federal and state governments on top of that. On top of that, people don't actually, that first homeowners also don't pay stamp duty on properties under $600,000. Okay, so if you can meet some of those thresholds, then it's going to be fantastic. And even if it's above 600,000, then it's a ratcheted scheme between 600K and 750. So again, there's that magic number, $750,000. Try to keep your finished product sitting underneath that. If you are in Queensland, there's between $15,000 and $20,000 based on a couple of different criteria for first home owners. Again, magic number, $750,000. So you can sense a theme here. So Queensland first home buyers already got that $15,000 towards buying or building a new home, whether it be a unit or a townhouse, so long as it was less than the 750. So combining that scheme, they'll get up to 40,000. Okay. Queenslanders also don't pay stamp duty on homes that are less than 500,000 and a discounted rate up to $550,000. Okay. So there's some substantial savings there. If you're in Western Australia, first homeowners get $10,000. So you've got a first homeowners grant of 10,000, the building blitz of 20,000, and the home builder of 25,000. So that's $55,000 if you're in Western Australia, if you're able to sell to a first homeowner. Okay, so that's fantastic news for those guys. Now, they also get discounts on their stamp duties as well in that scheme. So, you know, awesome opportunities for those guys. Stamp duty concessions available for first home buyers up to $530,000. Okay, next one is the ACT. Now, ACT is a little bit different. So ACT gets $7,000, but only if it's new or substantially renovated, and again, up to that magic number of $750,000. Okay. Now, the first homeowners grant will end for transactions entered into after the 30th of June 2019. So if they were previously signed up with you, then they would still be able to get that. Otherwise, it's pretty much come to an end. Okay. What I would say is that the ACT, though, has done some good things in around minimising stamp duties for incoming homeowners, and have abolished stamp duty for new homeowners. And they're looking at ratcheting that out over the next few years as well. So stamp duty is actually a thing of the past in the ACT. Tasmania, $20,000 bonuses for Tasmanians. So that's a total of 45,000. Okay. So in order to do that, again, we've got some magic numbers that we have to do here. So they get discounts on 50% stamp duty discount on properties below 400,000. So that equates to another $7,000 savings if for stamp duties as well. So last one, or sorry, second last one, I should say, South Australia, up to $15,000 for South Australians, new homes valued up to $575,000. So a lot lower than that $750,000 threshold for most of the other states. In order to get that, the new property has to be less than $575,000. Okay, so they also get some stamp duty. Sorry, all first homeowners, I should say, pay stamp duty in South Australia, or there is there's an off the plan stamp duty concession if they're buying off the plan, and that can save up to $21,000 if it's off the plan and the property is under $500,000. So that can start to add up. And Northern Territory government is doing $10,000 discounts. Sorry, $10,000 bonus, new homes only. And on top of that, there is also a build bonus grant. So there's $10,000 for the first homeowners, and then there's a build bonus grant of $20,000. So that's a total of $55,000 for Northern Territorians. So all in all, folks, when we look around the grounds, there are some major discounts across each of the states if you can price your product accordingly and put them together as house and land packages. And that's what I would be trying to do as much as humanly possible. Those of you who are doing townhouse projects, much harder to do, or even unit complexes, much harder to do those as house and land packages. So it's really those of you who are doing developments that are subdivisions who are going to really massively benefit from this approach. Unfortunately, the townhouse builders may be a little challenged here. Now, there's something that I would encourage you to investigate, but I'm not sure about the logistics of actually executing it. If you've got a townhouse project and they're actually detached houses rather than semi-detached, you may be able to convince your builder to have individual build contracts for each individual townhouse. That may allow your ultimate buyer to actually have an individual contract with that builder. Now, that will be a little bit of a logistical challenge. I'm not going to say categorically that it will work, but it's certainly worth investigating if you're doing townhouse projects at this point in time. Make sure that you actually investigate that to see who would actually benefit from that, because it's really the homeowners that we're aiming for. Make sure where you can to look at those magic thresholds in each of your states. Now, the majority of them are $750,000. So if you can keep the final product under that magic 750K, then a lot of your incoming buyers are going to get access to massive discounts, which will make it very, very attractive for them to come on board, both with their stamp duty, building bonus, state government and federal government bonuses. So now, some other things that are coming up. So some of my predictions, now watching what's actually happening around the States. This has been happening for a little while, but I think with COVID, it's getting a lot more momentum at the moment. And that is that stamp duty is potentially going to be abolished. Now, New South Wales and Victoria have been looking at this for a little bit of time. They've actually, their individual Treasury departments have been putting quite a bit of effort into looking at it, because stamp duty is a very inefficient tax, which by that it means they only collect the revenue when properties sell. And in times where properties aren't selling, that means the state government doesn't actually receive tax. And so in times like now, where we're in a recession and the number of sales actually disappear, stamp duty is a very, very inefficient way for the state government to actually collect its revenue. Instead, they're looking at potentially translating that over or transferring that over to an annual land tax instead. So a small, consistent clip of the ticket every single year on every single property, as opposed to just the transactions that are actually coming through. Now, the reason why they're doing that, one, it's an inefficient tax, and two, it's seemed to be an impost on anyone actually wanting to get into the market. You know, sometimes it's anywhere up to $50,000 additional cost on top of purchasing the property, which makes some properties quite out of reach in order to do. Now, what is really, really interesting is that the ACT have actually done this already. They actually did it way back in 2012. And they have a 20-year program to ratchet their way out of stamp duty and instead go to an annual land tax. And so that is already in play. And New South Wales and Victoria, I think, are going to be following suit very, very quickly. And if they do that, as they're, I guess, the largest property transactions in the country, I see it won't take long for all of the other states to do very similar. And I think that they will be setting the groundwork for everyone else to follow. I think New South Wales are going to lead the charge on that, is how I'm reading this. Don't count on it coming through any minute. I think it's going to take a good couple of months before it actually comes through and gets ratified. But I think the time is right for it right now, because right now there just aren't the property transaction volumes that they're actually anticipating. So that said, folks, a bit of a self-plug now. Many of you know that we actually run a 12-month education program called Property Development Formula. Just letting you know, we have a one-off special intake that's happening at the moment. It's kicking off the 10th through the 12th of July. It's a 12-month program if anyone is actually interested. It is application only, and there's only 3 spots remaining. So if you're actually interested, go to developernetwork.com.au/PDF, short for Property Development Formula. That said, if I might go out to the world and see what questions are actually coming through at the moment, and see if we can take some questions from the crowd. So I'm just going to stop that share and bring myself back up and see if I can find some people asking questions. Well, can't see any questions coming through at the moment. What's happening here? Well, I cannot see any questions. Facebook is letting me down. Let's see if I can find this the hard way. Give me 2 secs, folks. My humble apologies. You've got to love technology. Every single time we try to do this, things happen slightly different every time. So, well, it is there. It is happening. So, and there are people watching. Let's see if I can find, here we go. Found it. Okay, folks, who can I see? I can see plenty of people saying hi. So I'm going to say hi to everyone. I won't name people individually, but I can see plenty of comments there. So let's see if I can find the first question. Luke saying property councils, jokers looking for more stimulus. Sorry, jokers looking for more stimulus, which helps us. Thank you, Luke. I don't know about their jokers, mate. They look after a fair amount of the industry from an industry body and lobbying the government and that sort of thing. So they certainly have a purpose. They may not be someone who actually represents the ultimate owner of the properties, whether you be an owner-occupier or an investor, but they do look after, I guess, the builders and the tradies and that sort of thing, and actually try and look after the jobs that are actually created in the policy. The Reno policy, so Lucas said Reno policy is a joke. I tend to agree, mate. The 150 minimum spend is crazy. I agree. I don't know what else to say with that. And it really is based on that 750K price tag. I think it really only helps either regional or not necessarily regional, but outer ring type suburbs. It doesn't really help anyone in a circle. And that's in, I'm going to say, most of the cities. If you're inside the 10K ring, chances are you're not going to get a qualification for that at all from a reno perspective, because you're going to breach that either 750 mark, or also going to breach the 1.5 million value of the property if you're trying to renovate yourself. Daniel says, renovation, does it all need to go through a builder, or can you do yourself? How do they track if it's exactly 150K? So Daniel, you can't be an owner-occupier, mate. Owner-builder. You can't be an owner-builder. So you will have to have a licensed builder actually doing the work. Now, that doesn't mean the licensed builder has to do all the work. If there are little things that you can do for yourself, I'm sure that would be possible, but you won't be able to make a claim against your portion of that. So you'll need to make sure that it actually gets over that 150K mark. Tony Gallagher says, Master Builders Association New South Wales has warned to not attempt to cancel an already signed contract, as the federal government has said they will police this. Thank you for that warning, Tony. So that's fantastic to know. And I'll just reframe that so that everyone else can actually understand that if you happen to have had a contract in place that's been signed and not yet commenced, the Master Builders Association have actually said, well, don't tear up the contract and re-sign a new one, because they're actually looking at that. And they are able to track that, because once you've signed your contract, you'll need to have paid your relevant state insurance policies for the build. So they'll be able to track that that's actually been done. A lot of people saying great information. Thank you. You're welcome. Ellen says, thanks for clarifying the grants across several states. You're welcome, Ellen. No problem at all. And Clayton says, hi, Rob. Do you know if someone has entered into a build contract pre-June 4 and they cancel and re-sign a new contract? So Clayton, we just covered that one a couple of seconds ago, mate. So hopefully that clarifies it. So no, you can't do that would be my answer to that. Make sure that you actually seek legal advice before you even try to attempt to do that. My guess is that the legal advice will say absolutely not. And certainly from what the Master Builders Association in New South Wales are indicating is that won't be the case either. So Peter says, I've got 10 townhouse sites with common walls. So Peter, my comment there, if you picked up on it subtly in the process, I don't know if this will work, but it's certainly worth investigating, okay? And that is, talk to your builder and say, for my 10 townhouses, would you entertain 10 separate contracts, one for each individual incoming homeowner? Now, I don't know categorically if that will work, but it seems to be a small little loophole that might work. I'm not sure whether or not that common walls element, though, is going to be the showstopper. And if it's detached, I think that it is very possible. If it's semi-detached, I'm not sure if it'll work, but certainly worth doing the investigation to check it out. While stamp duty rests in peace. Yes, I agree, Luke. Absolutely. Ellen says, I wonder if they would remove the land tax exempt threshold to increase the number of properties paying it. No, I don't think so, Ellen. They're really looking at, so let me rephrase that. I think what they're going to do is have land tax apply to absolutely everybody. And yes, lowering the threshold might be one way of doing that, or just removing the threshold altogether is probably the other way. It's hard to know categorically. I don't think the few people that are actually paying it being ratcheted up would be the answer. So I think it's going to be a small clip off everyone's ticket, and claim that over 20 years as opposed to a one-up hit when you buy the property. Luke says, I wonder how they'll scale payments for annual land tax. Well, that was what Ellen just said, mate. So hopefully you picked up on that. Henry says, any indications on how they will estimate the land tax for homeowners? Not yet, mate. It's still early days. Yeah, it's still early days, but my speculation will be lowering land tax thresholds or applying it to everyone and not having a threshold at all, or not having an exemption at all. Vanessa says, program is great. I liked it so much that I resigned from another 12 months. Sorry. Oh, sorry. That's Vanessa talking about our 12-month program. Sorry. Thank you, Vanessa. So she was talking about our property development formula program. Very much appreciate that. I'm going to give that a love. So thank you very much, Vanessa. So yes, Vanessa is one of our students and has not only has she done the first 12 months, but she's committed to wanting to come on for another 12 months because she's getting so much out of it. So thank you. Adrian says, will the new land tax be applied for the life of the property? Yes, that's the take on it, mate, is every single person will be paying that every single year would be how that's likely to go. Luke has said, whoa, I found this link on stamp duty. Okay, I'll have to read that one after, mate. I can't read it right now, but Luke says, low listings except for new builds. Not quite sure the comment there, mate, but yeah, I'm not quite sure how that reads. Ian says, have you seen anywhere how long you have to remain in a newly built owner-occupied home to qualify the grant, i.e. How quickly could you on-sell? Ooh, mate, what you're looking for, Ian, there is a little loophole, and I don't really know the answer to that. To be clear, though, if you were to do it, you would have to do that in your own personal name. And if you're doing it in your own personal name, turn it into your principal place of residence, not an investment property. And I don't know how long that is. I would hazard a guess that 12 months would have to be the minimum, but I haven't seen a measure. So I can't say categorically. Certainly worth investigating, but I'm not going to say categorically that it's worthwhile. So Luke is saying he's apologizing for the all caps. That's okay, mate. Just tried to copy and paste a link, but Facebook blocked the comments here as it goes against community standards. Okay, not sure what that means, mate, but I'll have a look at what that link is and see. Maybe they don't like the page that it's actually gone to. Peter says, get him to subcontract out to yourself. Oh, okay. I think he's replying to a comment a much higher up, and I can't remember who actually asked the question about could you actually do some of the work yourself? And I said you have to have a builder. Well, I think what he's indicating there is that if you get the builder to subcontract the work out to yourself, The question I would challenge there, Peter, would be whether or not you are actually licensed to do that work, and whether or not the builder would actually be voiding his own warranties and voiding his own claims if he subcontracts out to you. So Dan says, is there a deadline on how long the renovation takes? Now, for the federal government, there's no deadline in how long it takes, but there is a deadline in how long you take to take it up. So it's 6 months to sign the contract and then 3 months to start commencement. Now, it doesn't say about the end date. Now, the individual states themselves, though, for their own individual bonuses, they have indicated, many of them have said that you've got 18 months to complete the works. So I would suggest that that's probably the right sort of number to be thinking about there, Dan, but I don't think it's a hard and fast rule everywhere. Deborah says, what are your thoughts on a 1:2 subdivision, keeping the house right now? Normally this would be a quick flip, but if started now, would be wanting to sell right as the possible crunch occurs at the end of the year. It's not really related to today's topic, Deb. What I would say is if you're doing a 1:2 subdivision, there is going to be lots of incentives for people to be buying the finished product and put their dream home on there. So I'd be working with a range of builders to try and get some house and land packages on that block and keep it under that 750K mark, depending upon the state you're in. And then they would turn over very, very quickly. What they're trying to do is avoid that crunch that you're actually talking about. So if you were to do that, I think that the stock would turn over much quicker, and the crunch may be, if not eliminated, certainly minimized, and that's certainly their intent. Ursula says, government has started to play politics again, look, we are doing stuff, but only if you can get it, good accounting from the pollies. Okay. So I think Ursula's saying that Liberal and Labor don't necessarily agree with that home builder package. Labor is certainly quite critical of it, as are a number of different people in the market, basically saying that it's a little bit too constricting in who can actually access it. So I tend to agree that it is a little bit constrained, especially the reno side of things. Fabiana says, hi Rob, I'm back. What about this case? I have a large property with an existing house. I'm planning to subdivide and build, then live there. Does this still work? We're getting into technicalities, Fabiana, and I would say if you did I'm planning to subdivide and build, then live there. Unless you're actually doing the work on the existing house, I'm going to say probably not. But if you're going to do the subdivision, the challenge will be, can you actually get it complete in time to get the title in order to start the construct on the second dwelling? And if so, are you transferring your principal place of residence from the original front house into the rear house? I guess it's plausible, but I would say it's an outside chance and unlikely to work just from a logistics point of view. I think it would be very, very tricky for you to be able to legally justify that you've actually done exactly what you're claiming to do. And so whether or not you would actually get access to the grant, I think would be challenging, because it's not meant to be for an investment property. You can only have a single principal place of residence. Your single principal place of residence is where you're living. So you can't be building the new one in the backyard, I don't think. So I'm going to say unlikely, but you need to seek some legal advice on that one, Fabiana. So Luke says, do you think these policies will have an impact? They will have an impact, Luke. They will absolutely kickstart the jobs market. I know a number of builders that were very, very quiet up until it was announced, and then their phone started ringing straight away. So I think it will certainly get jobs happening. Will it get enough jobs? I don't know. Will it be enough jobs to, I guess, recover the recession fast? Well, it's certainly intended to slow it, but I just don't know how big it's going to be, and I don't think 25K is going to be enough. There are a number of different master builders and HIA and Property Council are all asking federal government for 50,000 and they got 25. So I think that there may need to be other things happening. I know that they're doing lots of major infrastructure projects that have either already been budgeted for future years and they've brought forward, or I guess brand new budgets been implemented. So I think they are also going to be creating jobs. Creating jobs is what they need to do. That's the only way that we're going to minimize the impact of this recession. Luke says, Rob, another question. What do you estimate the annual land tax would be? Do you think it depends on the price of the land? Mate, that is pure speculation. At this point in time, I really wouldn't know. It would be a pure stab in the dark, mate. And I'm not willing to put that one on the line. I think it will get eliminated. I think stamp duty will get eliminated and transferred over to land tax, but I just don't know the exact format that that's going to take. The Treasury is still doing the reports and recommendations on how that's going to look. So until we get some feedback on that, I don't know. Peter says, was thinking about down those lines. Okay. I must have responded to one of your questions before, Peter, so I'm glad that worked. Linda says, with the HomeBuilder grant, if I build a new property and it's settled, I moved in but decided to move out after 3 months, will I still be eligible for the grant if there is a minimum time limit so similar question to what was asked earlier, Linda. I really don't know if there's a time limit associated with it. What would have to happen? Would it have to be in your name, and it would have to be your principal place of residence? That would be the only way that you would plausibly get the grant. The question then is, how long do you need to keep it? I don't know. I've not seen anything with a time limit on how long you move in for. But yeah, I'd be very cautious on that one. But you may lose some of the other first homeowner grants and things like that if it's only 3 months. So be very, very careful. Ellen says, I've read that they require building works to commence within 3 months of signing the build contract for the grant to be acceptable. What if it's a D&C, design and construct, where you sign a contract with them, they go ahead and do the approvals for you, but the BA, so the DA and BA and CC takes more than 3 months. Therefore, the commencement start date isn't within the 3 month time frame required. Ellen, so that's a very good question. If it's a design and construct and they don't physically break ground, I would see, is there anything that you can get the builder to do to actually start the commencement? So rather than getting your civil engineer to do the sewer works and the stormwater works, etc., maybe get your builder to do that. So they're doing that right up front. They do break ground. It does actually, they prepare the slab, all of that sort of stuff, anything that they can do early and bring forward. But yeah, it's a damn fine question. The only thing I would suggest that you do maybe is that you do it as a design and construct, but have a part A and a part B to the contract or something like that. And you sign the part B, which is the physical construct, in several months' time once the design part is done. So pay a design fee effectively is what I'm kind of saying. Vanessa says, yes, absolutely. Great program. The best hands-on program for development for sure. Thank you, Vanessa. Really appreciate your kind words. Luke says, lol, I've just signed up for it and will arrange the initial call this week. Ah, yes, you have, Luke. So thank you, mate. Dan says, I think that's half a sentence, Dan. Not joining the PDF formula. PDF formula is the, and you didn't finish. Sorry, not joining. I've seen that the rest of it. Not joining is the biggest mistake cost I could have made. Thank you, Dan. Appreciate that. So Dan's another one of our students. And Matt Campbell is also saying it's awesome program. So thank you, mate. Luke says, thanks for reading my question, Rob. Shame I have significant lag on my laptop. I'm going to lean towards iPhone. Mate, I'm an Android user, not an iPhone, but it's not the lag with the phone. There's actually a lag between me presenting and Facebook actually accepting it, and then you guys giving me a question back. So live is not actually live. There's anywhere up to a 45-second lag before you see it. So don't stress, mate. I don't think it's a technology problem at your end. I think that's a Facebook design issue very deliberately. Tony Gallagher says he can't, you're not licensed. That's in answer to the can you be subcontracted further up above. So thank you, mate. Appreciate that. Luke has found the ability to put that that link in. I'll actually read that a little bit later, Luke. So thank you for sharing that. Tony says, I doubt your builder will want to take longer than a typical build schedule. And I'm not sure who he's responding to with that one. Luke says, do you think we can make the annual tax thing as a tax write-off? Sorry, do you think we could make this annual tax thing as a tax write-off? Obviously, we don't have all the facts yet. I'm not quite sure I understand your question, mate. So yeah, I don't know. And my lovely sister has joined. Hello, my lovely sister. Welcome. That's very unlike you on the other side of Australia to be joining me. So thank you. Love you. Zenko says, how can I have a principal place of residence on land with no house or house under construction? Nobody can live there. Thanks. No. So Zenko, it's okay if it's your intended principal place of residence, but you would actually need to be documenting that that is the case and then physically move into it afterwards. If you have an existing house that you've actually got as a PPR, that's okay, but you would have to then get rid of that one and move into the new one. Luke says, where to from here for property? Mate, for property, I think there will be a dip. Absolutely, there will be a dip. It's a matter of how much. I was watching a very good economist from Westpac the other day, Bill, and I'm trying to think of his surname. It'll come to me in a moment, where he was going through all of the reasons why he's thinking the property market will drop and how far. His predictions were between 10 and 15%, and most of the stats that he was quoting have been the same ones that I've been quoting in the last 10 to 12 weeks or so, folks. So I'm quite confident that we will be dropping, but he also predicts that there'll be a fairly rapid recovery in 2 years or so, which I tend to agree with as well. So Bernard Ting says, can I build new home and demolish old investment house? Bernard, you can't do investment at all, mate. It has to be an owner-occupier. So yeah, no investments at all. So it's only owner-occupier for your principal place of residence. Luke says, sorry to put you on the line. Thank you for the answer. That's okay, mate. All good. Deborah says, do you think a house relocated onto a block of land would count as a new build and be eligible for grants? Technically, I think yes, Deb. And the reason for that, so just to qualify this so that everyone knows, there are relocatable homes. So if a home is on poles, you can actually relocate that from one site to another. They chop it up into pieces that are narrow enough to fit on the back of a truck, and then they take it down the road and reassemble it. Now, when you put that on the new block of land, it is technically a new building approval. And by that, you then have to comply with all of the current National Construction Code rules. So you have to make sure that the electricals are up to date, the roof battens are tied down, the energy efficient ratings are there, all that sort of stuff. So I think technically it would work, Deb. No reason why it shouldn't, but conditional on principal place of residence and in your name. Okay, so that's probably the catcher for that one. Tony Gallagher says temporary fence work is started. I'm going to challenge that one, Tony, only because I have had to go down, certainly if you're using a standard master builders or HIA contract, that is not deemed commencement date, because I've actually had a challenge with liquidated damages with one of my build contracts in the past, and had to go to HIA to challenge it, and they they did not deem that the temporary fence work was actually commenced, and instead it was actually breaking of the ground that they deemed to be commencement. So unfortunately, when you look through those standard contracts, there is actually no definition of commencement. So that's what I found in going through the process anyway at 18 months ago. So unlikely anything's changed that timeline. Ellen says, any clarity on what will classify as commencement? Temporary fence. Ellen, that was just what I was just talking about with Tony. Breaking of ground is what I have found. Tony is saying temporary fence. I think you're going to have to read your contract to deem that. And if need be, it could be that you put a special condition in that actually states this is commencement. Erecting the temporary fence is commencement, in which case that might be the loophole to get you around. Will demolition count as commencement? If demolition is counted in your construction contract, in your build contract, then I don't see why that would not be, Ellen. So thank you. Evans, thank you, Luke. So Bill Evans from Westpac, thank you, mate. Greatly appreciated. K Wong says, what do you think will happen to the Australian share market after 1st of July? I don't know, Kiwi. I don't do shares. I certainly have a following to see what the market is doing, but I'm not going to try and predict it. I think that the share market is behaving quite erratically in comparison to what's actually happening under the covers, and I'm not going to comment on what I think it should be doing, other than to say I'm in property, and that's what I'm here to talk about. Luke says, sorry about that unclear question. All good, mate. My question was about an annual land tax that replaces land tax. I'm aware you don't have all the details. But as this option, do you think that the annual land tax would become another simple cost of business? So land tax is already a cost of business. So if you're doing developments, depending upon the state, land tax is actually calculated on a specific date. So if you own the property on that specific date, you pay land tax. If you don't own it on that specific date, you don't. So in Queensland, that specific date is the 31st of June. In New South Wales, that's on the 30th of December. So if you buy the property on the 1st of January and sell it any time during the year before the end of the year, you would not pay land tax. But if you bought it on the 25th of December and you sold it 2 weeks later in the first week of January, you would pay land tax because you trigger that one date. So you have to always be careful of that. And yes, it's always a cost of doing business. Peter said, I would never relocate a house that isn't designed for it again. Okay, mate. Clearly there's a story behind that. I'll look forward to catching up with that over a beer at some point. Bernard says, knock down old investment house, build new home and move in as PPR. Well, if you're going to do that, Bernard, firstly, is it in your personal name? That's the first question. And what evidence have you got that that's what you're actually going to do? So you're going to need some form of audit trail to say, well, it was an investment before, it's now going to be in my PPR moving forward, and be able to justify that, because up front, you know, they're going to basically say, well, it's been an investment so far, why would that be any different? Luke says, I do property. Yes, I do property. Absolutely, mate. Several of us, that's all we do. So Ellen says, that relocatable home idea sounds great, Rob. Thanks for answering our questions, i.e. PPR. What if the property was an investment, but the intent is to demolish and rebuild as a PPR? Again, similar to what I had with Bernard before, is it in your personal name, and have you got an audit trail to prove that it is converting? That would be my challenge. Make sure you talk to your accountant as to what substantiates actually doing that. Luke says, thanks for your answers and love it. And I've finally caught up to the end. So thank you, folks. I am going to say farewell, as that is the end of the questions. We're just coming up to the hour. So thank you once again for coming to another one of our Sunday sessions. We look forward to catching you again next week. And don't forget that next Saturday, we also have our Brisbane virtual meetup. So if you're in Brisbane, or if you're anywhere in the country and want to listen in to what's happening in and around the Brisbane market, then why not join us there? Till then, folks, I'm going to catch you next time. Bye for now.